It's been another busy week in the M&A world. There's been talk of a possible Yahoo takeover. We did learn that Pfizer is buying King Pharmaceuticals for nearly $4 billion. And, of course, a Chinese company takes a huge stake in a Chesapeake Energy project. So what other deals are going down? What are some of the currents in the market right now? Well, Paul Parker is joining us now. He's done $600 billion worth of deals through his career. He is the global head of M&A at Barclays Capital, and he joins us live this morning. Paul, it's great having you back on the show.
Thank you.
We were talking this summer about just how hot things were. I know in this quarter it's been the busiest in 2 years. $562 billion of announced transactions. Does the pace slow down from here?
I don't think so. I think we're actually moving from what obviously had been a crisis mode to a transitional mode where very big deals were happening as first movers were making their moves and taking advantage of the market, and then obviously you had a lot of restructuring activity going on. But the middle market of M&A was in effect missing. This year, and I think it's good news, one for the economy, but also for the M&A market. Deals between $1 and $5 billion are up 60% over last year in terms of actual numbers of deals, and I think that's a real telltale sign in terms of where the market is headed. And even those deals in the $5 to $10 billion range are up 20%, and the $10 to $25 billion range are up 25%. What's interesting, despite some of the bigger name transactions that have occurred, the blockbuster transactions above $25 billion are off 40%. So it really is the bread and butter M&A market that's come back.
But talk to me about valuations, because specifically with this takeout of Gymboree by Bain Capital, that $2 billion bid, a lot of investors I've talked to, particularly who are active in the consumer space, are a bit confused about that kind of valuation. The premium in the offer, 57% of the stock price pre-deal, 24% over closing price the day before. Do you think that there's a bit of a valuation bubble out there?
I don't. If you look at the numbers, it would indicate that we're still below historic averages. And if you look at the forward PEs over the last 10 and the averages for the last 20 years, as a market, we're still below those averages. And with the very inexpensive financing and so much cash on the balance sheet, which is dilutive for companies, you have a lot of structural reasons why people can pay a bit more than they would and still have it be a good transaction. Overall premia are actually slightly down from last year, and so in terms of premia paid, we're looking at 30 days averages and also a day before average. So we're not seeing a frothiness in the market. I think this is again, bread and butter, fairly steady paced market. It is up 15% over last year, and if you take out the financial rescues that were baked into the numbers last year, we're actually at a 25% increase over last year. So it's a very solid market, but we're not seeing frothiness. Obviously, any particular deal will have its own comparisons, but I think as a broader market, we're fine. Does
private equity just get more active, staring down the possibility of changes in tax structure? And also, talk to me about the structure of the deals themselves, because particularly the Gymboree one, the tender offer structure, a little bit unusual. Are we going to see more of that?
Well, I think there is a need and a desire to get certain transactions done prior to year end because of anticipated changes in the capital gains rates, which are meaningful. I mean, it has a meaningful impact in terms of proceeds actually pocketed. That said, you're running out of time. So we are working on a lot of sell-side transactions currently that are at various stages, and there is a very high sensitivity to the December 31 deadline to get deals signed up and closed. That said, financial sponsors activity is 12% of the overall market. 5 points of that is sell-side activity. So their buy-side activity is 7% of the overall M&A market, and 5 points of the sell-side.
All right. We got to leave it there, Paul. It was great having you on.
Thank you.